Welcome to Explain the Charts, your go-to channel for in-depth market analysis. Today, July 18th, 2025, we are dissecting Meta Platforms, ticker symbol Meta, a stock that has been capturing headlines and investor attention. Looking at the daily chart, spanning from March 2024 to the present, you can immediately see the impressive long-term upward trajectory of Meta, showcasing a clear and sustained bullish trend. This broad positive sentiment aligns perfectly with recent news, where analysts have been consistently raising price targets and upgrading ratings on the stock, reflecting strong confidence in its future. A key driver behind this optimism is Meta's strong performance in Q1 2025, which exceeded expectations and set a bullish tone for the entire fiscal year. Furthermore, the company's aggressive investments in artificial intelligence, including poaching top talent from competitors like Apple, are seen as significant catalysts for future growth and market leadership. The market is clearly pricing in this potent AI narrative, reflected in the sustained uptrend and increased message volume on social trading platforms, signaling widespread interest and enthusiasm. This consistent upward movement has positioned Meta as a top growth stock for long-term investors, as highlighted by various financial reports and positive fundamental indicators. Over the past 3 months alone, Meta's stock has seen a substantial 36% increase, underlining the strength of this longer-term trend. However, not every day has been a smooth ride. If we narrow our focus to the period around April 2024, specifically from April 19th to May 10th, we can identify a significant pullback or reversal attempt. Here, we see a sharp drop where the stock fell from around $500 to a low of $414.50 on April 25th, an important 52-week low that tested investor resolve and indicated potential vulnerability. This dramatic dip could be partially attributed to initial market anxieties regarding the high costs associated with Meta's extensive AI spending plan, as flagged by some analysts as a potential financial risk. Yet, the swift recovery from this level, with the price rebounding above $450 by early May, demonstrated resilient buying interest and a strong belief in Meta's long-term vision, effectively preventing a sustained downtrend. This price point around $414.50 would have served as very strong support, indicating where buyers stepped in aggressively, forming a key accumulation zone for long-term positions. The subsequent rally from this low also saw increased volume, a healthy technical sign confirming the bullish reversal from that critical support. Moving forward to more recent action, let's look at the impressive surge through June 2025, a period defined by accelerating growth and market confidence. During this time frame, Meta climbed steadily from the mid-$640s, eventually hitting its 52-week high of $747.90 on June 30th, a remarkable achievement that capped a powerful rally. This strong upward momentum vividly validates the overwhelmingly bullish analyst sentiment we discussed earlier. With an average price target of approximately $736.42, suggesting that much of this upside was already anticipated by Wall Street and provided a clear target for the rally. The robust volume accompanying this climb suggests significant institutional and retail buying conviction, reinforcing the strength and sustainability of this uptrend. The level of $747.90 now stands as a critical resistance point, an all-time high that the stock struggled to break past, hinting at potential exhaustion in the immediate run. This resistance is crucial for future breakouts, signaling where overhead supply has historically capped price progression and will require significant buying power to overcome. Now, shifting our focus to the shorter time frame, let's examine the 1-hour chart, specifically the trading action from July 14th, immediately following the June peak. We can observe a general downward pressure after the initial opening, with the price falling from the $720s to around $718, clearly indicating the start of a minor short-term reversal or correction. This cooling off is likely part of a broader profit-taking trend following the rapid ascent to new highs, a common and healthy occurrence after significant rallies that can purge weak hands. The European Commission's recent $234 million penalty against Meta for breaching the Digital Markets Act likely contributed to this cautious sentiment, adding a specific, albeit minor, bearish catalyst to the market. Regulatory concerns, even if seemingly small in the grand scheme, can often trigger short-term pullbacks and reversals as investors assess potential impacts on future profitability and compliance. Notice how the hourly candles show multiple attempts to breach intraday resistance, failing to hold higher levels, indicating persistent selling pressure rather than just a quick dip from initial exuberance. The consistent formation of lower highs and lower lows on this time frame unequivocally confirms a short-term downtrend, a clear technical signal for active traders to consider short positions or exercise caution. Drilling down even further into the 15-minute chart, we gain a granular view of yesterday's intraday movements, July 17th, illustrating acute and immediate price action. The price opened around $704.39 and experienced continued selling throughout the trading day, hitting an intraday low of $697.105, showcasing strong and persistent intraday bearish momentum. This rapid decline brought the stock very close to the crucial psychological support of $700, a key level to monitor for potential bounces or breakdowns. The closing price for yesterday was $701.41, indicating a slight rebound from the absolute intraday lows, but still a noticeable daily decline, underscoring the prevailing selling pressure. Current sentiment on platforms like StockTwits, despite the price dip, remains broadly bullish, with a sentiment score of 74, yet the recent price action indicates market participants are becoming more discerning and cautious, likely due to the highly anticipated Q2 earnings report on July 30th. This upcoming earnings report is a truly critical event that will determine if Meta's substantial AI investments are indeed translating into the expected revenue growth, projected at 16% year-over-year for Q3 by Piper Sandler, and if the overall valuation is justified. The market is keenly watching if Mark Zuckerberg's big AI spending plan will ultimately justify current valuations and massive future outlays, making the earnings call a major short-term catalyst that could trigger significant price swings. High volume during these sharp sell-offs on shorter timeframes suggests that the price movement is significant and not just minor fluctuations, confirming the intensity of the selling pressure and potential for further downside. Let's zoom back out to the daily chart to provide a comprehensive summary of key price levels and a forward-looking outlook for Meta. For the short term, the immediate critical support level to watch closely is the psychological $700 mark, a round number that often acts as a pivot point for market sentiment. A decisive break below $700, especially if accompanied by high selling volume, could quickly lead the stock down to its 50-day moving average, which currently stands around $678.85. This 50-day simple moving average is a very important dynamic support. Historically, stocks tend to bounce strongly from or consolidate around this level during healthy uptrends, making it a key area for potential bullish reversals. Further down, and for longer-term support consideration, strong foundational support could be found near the $650 range, which acted as a robust launching pad for the recent rally and represents a previous area of consolidation and accumulation. On the resistance side, the all-time high of $747.90 is the primary level to conquer, and a sustained breakthrough here, confirmed by strong volume, would signal extreme bullish momentum and enter price discovery territory. Beyond that, the average analyst price target of $736.42 serves as a potential near-term resistance point, suggesting a possible 5% upside from current levels if bullish momentum returns, offering a clear and achievable target for a recovery. Reasons to be bullish on Meta in the long term remain compelling and fundamentally well supported. Anchored by strong earnings growth expectations of 5.8% for fiscal year 2025 and a significant cash flow expansion of 54.9%. The company's top-tier XAX, growth and VGM-style scores further reinforce its strong fundamental prospects for sustainable long-term growth and potential market dominance in the AI space. Conversely, in the short term, bearish sentiment could aggressively prevail if the Q2 earnings report on July 30th fails to meet the currently high expectations surrounding AI returns, or if AI costs significantly impact profitability more than anticipated, leading to widespread disappointment. The recent EU fine also adds a layer of uncertainty and a tangible headwind, contributing to the short-term downside risk that could exacerbate existing selling pressure. For traders, meticulously watching volume on both up and down moves will be crucial. High volume on a decisive break above resistance or below support provides stronger confirmation of the move and its long-term sustainability. In the event of a bullish reversal in the short term, look for positive candlestick patterns such as bullish engulfing or hammer candles forming near these identified support zones on shorter timeframes, as these signal buyer resurgence. Conversely, bearish engulfing or shooting star patterns appearing near resistance levels could signal further declines, providing clear short entry signals and confirming selling dominance. Another crucial factor to consider is the broader market sentiment, especially in the tech sector, as Meta's performance is often highly correlated with the overall market trend and general investor appetite for growth stocks. As we rapidly approach the July 30th earnings report, expect increased volatility and potentially wider price swings. Therefore, managing risk with strict stop-loss orders and appropriate position sizing will be paramount to protect your capital and navigate uncertainty. Recapping the critical price levels for Meta, the $700 psychological level serves as immediate support. The $678.85 50-day simple moving average is the next key dynamic support level, and $747.90 is the major resistance representing the all-time high. An unbiased prediction for the bullish case, a retest and sustained hold of $700 or the 50-day SMA, coupled with a strong, positive Q2 earnings announcement, would highly reinforce a bullish continuation towards $736 and potentially new all-time highs. We assign this bullish scenario a likelihood of approximately 65% to 70%, given the strong underlying fundamentals and analyst optimism, provided the earnings meet or exceed expectations. Conversely, an unbiased prediction for the bearish case, a sustained break below $678.85, especially on weak earnings or negative forward guidance concerning AI costs, could see Meta testing the $650 level, reinforcing a clear short-term bearish outlook. We assign this bearish scenario a likelihood of approximately 30% to 35%, contingent on the earnings report disappointing market expectations and breaking key technical support. Things to look for immediately are the price action around the $700 level in the coming days and any pre-earnings analyst commentaries that might shift sentiment. These will provide early clues for short-term direction. The actual Q2 earnings call on July 30th will be the primary, most significant catalyst determining Meta's direction for the coming weeks and months, so make sure to mark your calendars and prepare for potential volatility. Thank you for watching Explain the Charts. We hope this deep dive into Meta provides valuable insights for your trading decisions, empowering you to navigate these complex and exciting markets. Remember to stay disciplined with your trading plan and always conduct your own research. Good luck with your trades, and we'll see you next time on Explain the Charts.